Hey, everybody, we are going to talk about Warren Buffett's massive sale of Apple stock, how you should think about it. Should you worry if you're an Apple investor? What we think of the sale. Dan Caplinger is joining me. He's a longtime Motley Fool contributor. Dan, thank you for joining me today. And before we dive in, take a minute and check out the link you see on your screen, fool.com/Frankel. Get the top 10 stocks to buy right now from the Motley Fool. It's the best way to support this work we're doing on YouTube. Again, that is fool.com/Frankel. So let me just give you the quick rundown if you're not too familiar with what happened. Earlier this year, Warren Buffett sold some Apple stock. I want to say it was about 13% of the stake at the time that he sold in the first quarter. In the second quarter, he sold roughly half. And it looks like the sales are done. I'm going to ask you, Dan, if you think the sales are done in a minute, but he has exactly 400 million shares. Oddly enough, that's exactly how much Coca-Cola stock he has. And that nice round number makes me think that it's finished. It's still Berkshire's biggest investment by far, but it freed up something like to the effect of $90 billion worth of cash. Buffett, as he normally does, has not disclosed any reasons why he sold. We're going to get into some of the reasons we might think. But, Dan, you told me before we recorded that it's not just that the sale doesn't bother you, but it actually kind of makes you happy. So is that because you thought the Apple investment was too big, or what are you thinking about there?
So there's a number of reasons why I'm really liking this move. One is just that it's not that I thought the Apple investment was too big. It is a big position, but when you consider Berkshire's overall asset base, the percentage, not just in the stock portfolio, sure, it's a huge part of the stock portfolio, but when you add in the wholly owned operating businesses, the other cash position that Berkshire has, it was not an uncomfortably large position. In fact, no more uncomfortably large than it is in a lot of people's index ETFs and mutual funds right now, frankly. And so that part did not bother me in the slightest bit. What I liked was the fact that, Buffett throughout his career, he's a long-term investor. His favorite holding period may be forever, but he's not entirely ignorant about valuation. And when he sees valuations rise to such a point where it starts to stretch his incredulity as far as value investing is concerned, he's not afraid to pull the trigger. And I like that because that's what I want. I want a disciplined money manager who's not going to make exceptions in the way that they manage money just because you run into an amazing situation where you invest in what seemed like, Apple was a big company when Berkshire first invested money in it. It would have been a reasonable thing to say, oh, well, this is a mature company. Sure, it's going to grow, but it's not going to have fantastic growth rate. And boy, that stock is at a fantastic growth rate. And so, as you would expect, even though the business has done gangbusters, valuations don't look nearly as attractive as they did when Berkshire made the first investment. And so taking some off the table in favor, hopefully, of something that looks more lucrative either now or down the road, it makes perfect sense. And it's exactly why you would have Buffett at the helm or another good money manager at the helm, is to make decisions like that.
Yeah, I like the valuation. Apple trades roughly 33 times earnings right now, but it was trading for 42 times earnings in 2021. So why didn't he sell it then? I don't know if the sales are done. I like the 400 million as kind of like the indicator that it might be done for now. But it's worth pointing out to people that we won't know for a while if Buffett's truly done. Unlike a lot of his stock, like if Buffett sells Bank of America, we know the next day. If Buffett buys Occidental Petroleum, we know the next day. Even though Apple is a massive stake, because it's such a big company, Berkshire owns less than 10%, which is the threshold where they would have to actually, not in real time, but within 2 days, they would have to tell us what they were doing. So Buffett could be selling more Apple. I don't think he is, but he could be, especially if you see the valuation spike even higher. I wouldn't be shocked if he did. But I like it. I think it's a move to build cash. Buffett, especially in his older age, has grown very wary of of market turbulence and recessions and is really hesitant to invest in that. That was really brought to the forefront during the initial COVID crash. I remember when the market collapsed in March 2020. I tweeted at the time that it wasn't called Xing at the time; it was still called tweeting. I tweeted at the time that I thought Buffett was going to paint his masterpiece. Berkshire had over $100 billion in cash. Stocks were down by like 40-50% in a week, in a lot of cases, and good names Buffett liked, and he did nothing. It's not that he made the wrong call, because it could have gone the other way just as easily. But that really, I feel like Buffett 20 years ago would have reacted differently to the COVID sell-off. I feel like in his older age, he's become, and as Berkshire scales, he's becoming a lot more wary of recessions and turbulence, and whether or not he thinks a recession's coming. He views cash as kind of insurance against a recession and ammunition to deploy. They like to be what they call a net provider of liquidity to the system in tough times. And Berkshire's cash is now $277 billion. And interest rates are high, so it's sitting there earning money. As we've discussed, Buffett's not going to be around forever. He could retire. I'm not trying to be morbid. He could retire. But he wants to leave ammunition to the people who are taking over. That's, Greg Abel is going to be his CEO successor. Ted Weschler and Todd Combs are going to be the two portfolio managers. He wants to leave them money to work with to truly make the business their own and really show investors where it's going. I don't know. Do you think I'm off base? Do you think Buffett's raising the cash to, buy Costco or something crazy like that, or do you think he's kind of thinking the same way I am?
I don't. I think your analysis, I think, is spot on. The one thing I'll add as well is that Buffett will have a good sense among his longtime shareholders as to what their expectations are about whether they'll continue to hold their Berkshire stock until or through past the death of Warren Buffett, or whether they'll see that as a natural exit point. One benefit, Matt, you and I went to the Berkshire annual shareholder meeting, not this past year, but in 2023. And one benefit of that for me was seeing just how many local Omaha-based people there were who got into either the Buffett partnership or bought into shares of Berkshire Hathaway early on, or sitting on amazing wealth. I think one possibility is Buffett's raising this cash stake in anticipation of institutions, of these major investors perhaps taking something off the table after his passing, wanting to be in a position where the company can repurchase those shares potentially at a favorable valuation without having a big disruption in the market. Keep in mind, a lot of Buffett's shares are going to end up in the hands of charitable institutions. Those charities have fiduciary duties to their stakeholders to make sure they're not over-concentrated in stock. If Berkshire can make things easier for them by offering them quick liquidity, it could save the stock market from having sort of this adverse event in Berkshire shares just because of Warren Buffett's past.
You make a good point. If a lot of A shares of Berkshire flooded the market at the same time, it could be, turbulent to say the least. Yeah. I've said many times that the best day to buy Berkshire will be the day after Warren Buffett's no longer in charge. Because I don't think the company's going to go in a bad direction after that. I think they're going to stay true to the values and keep going.
And the expectations are so low.
Right.
It's because nobody can match Buffett, right? So if Greg Abel or whoever is running the show, if they even come close, it's going to be better than a lot of people expect.
Yeah, no, I own Berkshire because I think it's going to marginally outperform the S&P over time. But yeah, thanks for joining me for this discussion. I want to hear what you guys think. Leave me some comments. Do you like the Apple sale? Do you not like the Apple sale? I'll do my best to respond to each of them individually. And thanks for watching. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment, so I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 4 times, So go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 650% as of April 16th, 2024, and are measured against the S&P 500 returns of 148% as of April 16th, 2024.